Hey, Tom, what do you think of this news? Certainly in light of the Alphabet news earlier this week, is this a good sign or a worrisome one?
Scott, I think Meta's move isn't surprising because Google had a lot of success raising $45 billion in a very short underwriting period. And I think it's a reminder that these AI companies are building basically, huge real estate infrastructures that aren't fully funded today. And that's why not only will SpaceX need to raise more money beyond its IPO, and OpenAI and Anthropic, and of course Meta and Google, but I do think they're showing a lot of promise in their investment today because there's been significant breakthroughs. So I think investors are going to give them grace, but you're right. I think Stephanie's right. This is not Meta's sort of financial profile is changing. It's changing from a free cash harvesting from their prior businesses to one where they're building land that could end up being beachfront property.
What's this sell-off about today, Tom? Did Broadcom spook the market? Did they start this? Is it positioning ahead of SpaceX and the biggest IPO we've ever seen? Is it something else? What do you think?
Scott, I think a lot of this, for instance, memory stocks are down, but they're back to where they were 8 days ago. I think the market did have a parabolic lift in the last month. And now I think there's some sobering taking place because expectations are higher. But I also think that SpaceX, $75 billion is a lot to ask the public to fund. So I think it is a big lift in terms of how you're going to fund that purchase. And so I think now when the stock's wobbled a little bit, I think people are raising cash. I don't think that this is the start of a broader correction yet, but as you know, we do think that later this year there's going to be something that feels like a bear market. Today's not fun, though.
All right, ladies and gentlemen, let's just call it what it is. Bitcoin is falling and falling and falling, and people are freaking out. But remember one thing real quick. We hit $126,000 all-time high. People were euphoric. Everyone was super excited. And then Bitcoin fell all the way to $60,000 back in February of this year. So that big drop, that freaked everyone out. Literally, the fear and greed index went down to a 5. I've never seen the fear and greed index hit single digits, but that's where we were just back in February. Now, the reason why that's important is because we're back to about $62,000 here now in the month of June. So between February and June, what happened? Everyone got a little light of hope. They saw that Bitcoin went from 60,000 all the way back up to 82. Everyone said maybe that was the bottom. Maybe that bear market is over and we're headed back to all-time highs. But not so fast, my friends. Bitcoin came back down and is retesting the lows of this market. Now, the reason why this is interesting is if you look at the RSI, it has been this low. This is the third time. You can see back in March of 2020, we hit this level. Then in February of this year, we hit this level, and now we're hitting it again. That usually tends to suggest that Bitcoin is super oversold. But just knowing that Bitcoin is oversold, knowing that the price is going down, it don't feel good for me, for you, or for anybody else. But understanding why it's happening is usually much more important. If we go and we look at Binance research, they say that the mechanism as to why this is occurring is very simple. They say that outsized equity returns in the public markets is pulling capital into the public market. So capital is chasing returns. It's chasing momentum in the public market. And so you see this rotation occurring. Well, when you get that capital concentrating in the public market, it becomes a capital black hole. Capital black hole means that the liquidity's got to come from somewhere. That liquidity right now is coming from Bitcoin. So people are selling Bitcoin and they're rotating their capital over into the public market and they are going and chasing the returns. Now, that means that Bitcoin's price drops and stocks take off. And you can see here that the NASDAQ is going up and Bitcoin is going down. But it's not just Binance Research that believes this. Michael Saylor, the biggest Bitcoin bull of them all, he came out this morning and he said that capital markets are funding the AI build out at historic scale. About $400 billion over 6 months. The Bitcoin ETFs have seen about $4 billion of outflows since May 14th. And he says that that is pressuring Bitcoin. This is a capital rotation, not a Bitcoin impairment. Volatility creates opportunity. Now, the reason why I think that that is interesting is because you have to remember that Bitcoin has become out of favor. Why is that important? Well, most investors, they've got this idea that they are going to take their capital and they're going to chase momentum. So they see AI stocks and public markets going up and they start to chase it. And guess what? When they buy those stocks and they go up a little bit in the short term, people get very excited. They think that they're geniuses. There's lots of geniuses in a bull market. But the problem with that is that usually you start to pour more and more capital into the top of the market. So what do great investors do? Great investors take the opposite approach. They look at the things that are very popular and they say, I'm not interested in the bubbly, frothy, very euphoric type things. Instead, what I'm interested in, let me go find the assets that are out of favor, that are going to come back into favor. The things that nobody wants right now that are cheaper than they were previously. So if you take a look at Bitcoin, that's exactly where it is. It was $126,000. Nothing has changed about Bitcoin. It still is producing block after block of transactions. It is still a store of value. It is still being adopted by Wall Street and sovereign wealth funds and many, many other types of capital pools. It is still becoming the backbone for digital credit and many other aspects of these financial instruments. Yet, the price went from $126,000 down to $62,000. So if you liked it at $126,000, you should love it at $62,000. That's the whole point, is you go and you find assets that are out of favor, and then you have strong conviction that they're going to come back. Now, the other thing that people are talking about in the Bitcoin industry that I think is very noteworthy is that Bitcoin is knocking on the 200-week average. Now, the reason why that's interesting is because historically, when Bitcoin gets down to around these levels, it has been a screaming buy. It has had great forward returns. Does it mean the history is going to repeat? No, but likely it will rhyme. So my guess here is as Bitcoin has come down here, it is going to become more and more attractive. You're going to start to see people step in, they'll buy the asset, and we probably will not see all of the fear, all of the chaos, all of the uncertainty that we've seen in the past. When you read the headlines, relax, take a deep breath, calm down. Everything is fine. People are going to be freaking out. But you, if you can control your emotions, if you can simply make smart, long-term decisions, you have an advantage. And so if Bitcoin falls, great. It means that it is cheaper for you to continue to dollar cost average into it, and everything will be fine in your portfolio, in your life, and around the world. And people who tend to allocate their capital to Bitcoin at times like this, they understand, don't allocate your money looking in the rearview mirror as to what has already happened. Instead, you got to look forward. And my guess is that there is optimism and hope going forward for Bitcoin because everyone hates it. And when everyone hates Bitcoin, that usually means that Bitcoin is preparing itself to do what Bitcoin does best. The asymmetry will be back.
Hey, I am Maria with Daily Dose Crypto. Have you noticed that gold, silver, and Bitcoin have hit all-time highs recently? Is this a coincidence, or are smart investors onto something? The dollar is depreciating, inflation is eating up all of our cash, and the US national debt is through the roof, hitting new highs every day. That's why people are shifting to alternative assets like gold, silver, and Bitcoin. We at Daily Dose Crypto have partnered with iTrust Capital, your one-stop platform to buy and securely store 80+ digital assets, including Bitcoin, gold, and silver to hedge your future against debasement. With over 200,000 accounts, 15 billion in transactions, and 11,000 plus positive reviews, they're helping real investors build long-term wealth with their tax advantage, IRA, and PCA, which is a premium custody account that supports the highest level of custody and security in the space. They do this all with institutional-grade custody through partners like Fidelity Digital, Fireblocks, and Coinbase Prime, keeping your assets secure while you can trade 24/7. Fees are just 1% per transactions with no monthly or annual costs. Getting started is simple. Sign up for free and fund an IRA or PCA today. You'll receive a $100 bonus and start growing your assets the smart way. Click the link below to open your account now and begin your journey toward generational wealth.
Michael Saylor has sold 32 Bitcoin, and the world is asking, has Michael Saylor lost faith in Bitcoin? Will Bitcoin die? What is going to happen to strategy? All of those questions are important, but before we get to the answers, we must first understand what exactly has happened here. Now, Strategy owns over 843,000 Bitcoin in total, and they sold 32 of them. That is 0.000037% of all Bitcoin they hold. Just look at this chart right here to see how ridiculous it is, of how small amount of Bitcoin they've actually sold. But that's not going to stop all of the haters from coming out of the woodwork and saying that Michael Saylor has lost all faith. He no longer believes in Bitcoin. It is over. For example, take Peter Schiff. He says that last week, MicroStrategy sold 32 Bitcoin for about $2.5 million at an average price of $77,135. Since Bitcoin's biggest buyer has now become a seller, where will the new demand come from to sustain the pyramid? Bitcoin's already below 72K, which is about 7% below where Saylor sold. Now, of course, there's a lot of people here that Michael Saylor has sold. I saw people talking online saying they may sell their Bitcoin if Saylor's selling his. But before you do that, it's important to understand Why did Michael Saylor sell Bitcoin? The answer can be found in a very nuanced aspect of traditional finance. See, all these companies that are holding Bitcoin on their balance sheet, most of the different vendors, regulators, or different service providers, they gave zero value to that Bitcoin. The belief was that if you're never going to sell the Bitcoin, then what is it really worth? How could you say that Bitcoin has any value if you simply are going to hold it forever and you're unwilling to sell it? Don't take my word for it though. Jeff Walton had a great explanation for this. Take a listen.
David, all of this has happened so far with the global banking standards providing zero credit for Bitcoin as capital on a balance sheet.
Right.
Zero.
Right.
The S&P 500 gave Strategy a B- issuer credit rating, and they valued the $60 billion of Bitcoin on their balance sheet at zero.
Which actually seems like an opportunity, because if you, are, as an investor, don't value that at zero, you value
greater
it at
than
something
one.
else, greater than one, all of a sudden there is an edge there that
Alpha.
somebody can take advantage of. Yeah.
Alpha is created. Yeah, that's probably the last legacy hurdle, that if that changes, the scale of capital that's going to come into Bitcoin is absolutely astronomical. Because right now, if a bank were to hold Bitcoin on their balance sheet, it would be punitive on their capital requirements for the bank. So it doesn't make sense to hold. Insurance companies, same thing. They can't hold it. Like, they get zero ability to leverage against it. So like, why would you hold it? I will hold MSTR instead.
This is what makes companies like yours, True North and Strategy, actually disruptive, is because you are doing the thing that no one else can or would otherwise do, just because the bureaucracy, it hasn't supported it yet.
We are transforming the asset. We are the transformers to purify the asset into different forms.
Now, I tend to think that this is a very good way to think about this, is if nobody is going to give you value for Bitcoin on your balance sheet, you have to show them that it does have value. And there are a couple of people across the market who explicitly called this out. Take Mark Moss as one example. He says that Strategy is not Bitcoin. They're a public company navigating public equity markets. The Bitcoin sale was a maneuver to signal rating agencies and credit analysts demonstrating the tools they can and would deploy to protect preferred holders if needed. In that sense, the sale is not a change of heart. You can see this in the sample size. It's a signal the company is willing to monetize part of its Bitcoin reserve when its capital structure demands it. I agree with Mark, and I think that it is very obvious to see what they're doing here. But he's not the only one. James Thorne also tweeted out, and he said that MicroStrategy did not sell Bitcoin because it lost faith in the asset. It sold to demonstrate that it can turn its hoard into hard cash to meet dividend obligations when required. In my opinion, for rating agencies and credit analysts, realized liquid resources carry more weight than unrealized gains in a volatile asset when they assess coverage and resilience. In that sense, the sale functions less as a change of heart and more as a signal that the company is willing to monetize part of its Bitcoin reserve when its capital structure demands it. Now, you don't have to believe Mark or James or me, though. Michael Saylor himself talked about this just a few weeks ago. Take a listen to why Saylor said that he may one day sell some Bitcoin. Here it is.
But there's been a bit of confusion in the market about where the dividends come from. How do we pay the dividend? And for most of the history of the instrument, we sold common equity, MSTR equity, to pay the dividend. MSTR equity is a derivative of Bitcoin. It normally trades at a premium to Bitcoin. And so we were selling a Bitcoin derivative. But some people worried that we wouldn't be able to sell the equity in the future. And then there are short narratives that we have to sell the equity. And then there are other narratives that the company won't sell its Bitcoin. And that kind of metastasized to, well, if they're not going to sell their Bitcoin, it must not have any value, and they can never sell it. And if they can't sell it, then we can't count the Bitcoin as an asset on the balance sheet. So if you had $65 billion worth of something and people wanted to value it at zero, it's not very good, right? We don't want the credit rating agencies to think the company has $0 of assets. We want the credit rating agencies to think we have $65 billion of assets. And, there are also trolls on the internet that continually complain that this is a Ponzi scheme because we sell equity in order to fund a preferred dividend. Well, what we want to do is we want to reinforce the business model is we sell credit to make a capital investment in an asset, Bitcoin, digital capital. The capital investment accretes over time faster than the dividend. We then monetize the capital gain and we pay the dividend. We think that the best way to punctuate this, to make it very clear, is to make the point that the company doesn't have to sell common stock ever. We can simply sell highly appreciated Bitcoin in order to pay a dividend. And if we do that, you're capturing a capital gain to pay a credit dividend. The analogy is like a real estate development company raises capital by issuing a credit instrument, buys land at $10,000 an acre, develops it, it's worth $100,000 an acre, and then they monetize that capital appreciation. You could sell the land at $100,000 an acre. You could rent the land after you fully developed it. You could refinance the land. But nobody questions a real estate development company that makes a capital investment with a credit income. What we're doing is the same thing with Bitcoin, and we want to make sure that the market understands that.
So there you have it. If you never sell your Bitcoin, then the critics will say it has no value. But Saylor has 843,000 or more Bitcoin. He sold 32 of them. It is literally such a small percent. It is just like a speck of dust in the universe. Everyone relax, calm down. I don't think Michael Saylor has lost faith in Bitcoin whatsoever. In fact, I think the exact opposite is true, is that through this sale, all of a sudden, every credit analyst and all of these different vendors, all of these different market commentators, they now have to put value on Bitcoin. They have to look at the balance sheet of these companies and say, you know, maybe Bitcoin has actual value. Maybe it could be sold and turned into dollars when and if it's needed. That is how Bitcoin continues its trek of mass adoption. See, in traditional finance, you can't simply just be a religious zealot. You have to understand what is the environment that you're operating in. And it takes someone like Michael Saylor, who's been a public company CEO for 25 years or longer, to say, you know what? I'm going to do the thing that's going to answer the critics. I'm going to do the thing that is actually going to prove that Bitcoin is this valuable asset that I've been telling everyone. And selling 32 Bitcoin may have actually been a $2.5 million investment in getting that done. Now, with this is all happening on the backdrop of Bitcoin becoming much, much more valuable and also getting to more adoption. And it's not just Saylor and Strategy that are selling Bitcoin. Our publicly traded company, ProCap Financial, which trades under the ticker BRR on NASDAQ, we also sold Bitcoin last week. We sold just over 50 Bitcoin, but not because I gave up faith in Bitcoin, not because I don't believe in the future prospect of Bitcoin, but actually for the exact opposite reason. See, our stock was trading at almost a 50% discount to the actual Bitcoin that was on the balance sheet. And so by selling Bitcoin at 1x NAV and buying back shares at 0.5 NAV, that means that all existing shareholders actually got more Bitcoin exposure. See, this is the thing, is as Bitcoin enters the traditional market, what you are going to find is that people who run these companies, these funds, or hold this asset, they have to be smart capital allocators. And so in a way, not only was I able to sell Bitcoin and actually increase everyone's Bitcoin exposure, Strategy was able to actually sell Bitcoin and show the world that the Bitcoin on their balance sheet has value. Everyone is trying to optimize for how do we make sure that Bitcoin is successful? How do we make sure whether it's shareholders, individuals, institutions, or eventually governments have exposure to the asset? Don't think that most people you see making these different decisions, they're not giving up on the asset. It's the exact opposite. They're doing the things that are necessary to actually help the asset be successful. And I know that there's a lot of noise out there. I know there's a lot of people who don't understand or don't agree, and that's okay. It's the beauty of Bitcoin. It's decentralized. Everyone has a voice. Everyone can go ahead and pontificate on the pros and cons, on the positives and the negatives, on trying to understand where is the risk and where's the potential reward. You can look at Joe Burnett when he says that Bitcoin's approaching a tipping point and almost nobody sees it coming. The BlackRock Bitcoin ETF was one of the most successful ETF launches in history. We now have publicly traded companies issuing low volatility US dollar instruments to buy Bitcoin. We have the President of the United States saying America will be the Bitcoin capital of the world, while the US dollar debt crisis only continues to worsen. At the same time, many Bitcoiner sentiment is absolutely terrible. They think the ETFs are a negative. They think issuing low volatility US dollar instruments to acquire Bitcoin is a negative. I believe that view is deeply mistaken. The hive mind of market participants operating in open, free public markets is learning it can print abundant, low volatility US dollar instruments to acquire an absolutely scarce asset. Be prepared to possibly watch Bitcoin melt faces over the coming 12 to 24 months. Now, the reason why this is interesting is because the idea of a speculative attack on Bitcoin has always been there. We have seen people like Pierre Rochard and many others talk about this for years. The idea is to get dollars, which are losing value, and use those depreciating dollars to buy Bitcoin, which is an appreciating asset. People have been doing this for a long time. How do you think so many people own homes in America? They take the depreciating dollars and they buy an asset in a home that appreciates in value. And the arb is where wealth is generated. We now are seeing this happen all over finance when it comes to Bitcoin. And I believe that what Saylor and Strategy just did is just going to be another data point on a timeline of Bitcoin marching from an asset that was created and almost no one knew about all the way until the world recognizes that you need a scarce, digital, non-sovereign, decentralized asset in the world that we're headed towards. And I believe that Bitcoin will be the king and remain the king for a very long time to come.
Stop. You don't have time. Don't miss out this 2025 bull run. Educate yourself first ahead of the crowd. We have created the ultimate step-by-step crypto cheat guide that will guide you this bull run. Unlock the secrets of crypto and make smarter investments today. Now by clicking on the link below to get your exclusive copy just under $10.